Good morning, traders. Manny Cabrera here, co-founder of MDC Trading Academy, with today's pre-market forecast for the Emini S&P 500 for end of the week, Friday, August the 28th. And what a week it has been in the markets. Let's jump to our news reports. The week has been absolutely incredible in reference to information. Market continuing to consume a lot of this information and continue to use this as the basis for proof that the economy continues to strengthen and continues to recover quickly. Today at Friday, remember, we have quite a few reports. We just had, obviously, core PC and personal spending. Those both were reported at 8:30. We do have Chicago PMI, really important report at 9:45. Revised UOM consumer sentiment. And of course, the Jackson Hewitt Hole. We're not expecting anything to come from there. So just keep your eyes open for that 9:45 and the revised UOM that's coming at 10 a.m. this morning. Now, the market, that's the star of our show, and it's been an absolutely incredible week in this market, as this market is a relentless pursuit of continuous all-time highs. Right now, the market is high is at 3509.50. So we're just continuing to break this week alone. You can see it here. Here's Friday, Thursday, Wednesday. This is the whole entire week: Monday, Tuesday, Wednesday, Thursday, and today, Friday. Every single day, again, we have established all-time highs. Now, I want you to keep perspective. This is where we were on March 23rd. Okay, we were down to 2177, around that area, 2100. We have roar over 1300 points to the upside, and where today is the 28th. In about 5 months, let's see, we're talking about April, May, June, July, August. In 5 months, the market has totally recovered its losses from the pandemic, the first reaction of the pandemic. This is an astonishing accomplishment. The economy continues to get better. And then as traders, guys, like it or not, agree with it or not, we have to trade what we have in front of us. And as long as the market continues to go up, that's the way we got to look at it. We have to be very selective on which direction we're heading. Look at it from both sides, but remember that the strength in this market continues to the upside. Let's jump a little deeper into this market, and you can see this is market continuing to have the same pattern: runs, consolidations, runs, consolidations. Remember, this was a double top that we had up here, runs, and then here, and then it even stopped. It just continued higher. Now here's a top, here's the bottom, and the market could just bore right through it. Just bore, like it's incredible. It's like a drill bit, just boring through everything. Market just continues to establish all-time highs. One of the interesting things that I forgot to mention to you, which is very rare but very significant, and it's in our daily chart, is the fact that yesterday was an up day in the market. And look at the volume. Very rarely do you see really huge volume bars on the way up. That means that not only do you have volatility, but the participants understand what's going on, and this is a sense of agreement, of consensus in the market of what's going on. So that's a very clear thing. Remember, the less volume that pushes a market in any direction, the less likelihood there is that the market can remain there. So that's just a bit more of information for you. Now, in reference to trading today, and we're going to get into these patterns quite a bit. Here's the intraday high of yesterday. Here's the intraday low. What we have here is a very clear compression, and it's going to happen. Remember, there's a lot of pressure coming off this all-time high. There's a lot of selling pressure coming off the all-time highs. That makes sense to you. That should make sense to you. People buy, people sell. People buy low and buy and sell high. So what do people who bought here and sold up here want? They want the market to come down again and begin the cycle of accumulation and distribution again. And that's what you see here. Now, as long as the market remains between these two areas, obviously it makes it a little bit tough to trade. But what we're expecting, the most logical conclusion is, the most logical scenario we're looking for is a break below one or above the other. Now, can the market move sideways? It can. But is it going to remain sideways? And the answer is obviously not. But look for the breaks out of these areas in order to really determine which way the market wants to head, at least initially. Now, remember, break above this here, we're looking at a potential retest of here, break of this area here. Ultimately, the market can get all the way down here. Now, remember that before we get down there, there's a few Fibonacci areas that we need to look at. So we want to measure from the bottom of yesterday till today. The market can retrace all the way down to these areas here. By the way, all these areas are previous pivots. If you notice, they're all previous pivots of our areas. If the market retraces to there, it could still continue. Now, from here to here, it's going to be short. Any break below the 61%, then you're seeing it's a complete turnaround from the top, retesting as a reset down here, and then we can go from there. Otherwise, we're looking up, right? Have a great trading session and a great weekend, and please stay safe out there.